Markets across the globe are down on fears that there is going to be further attacks in Israel. Bitcoin has also dropped, along with gold. So there's really no safe havens today. Cryptos have gotten absolutely clobbered overnight, many down up to 20% against BTC value and against USD value even further. So I want to discuss what's going on in the markets today, give you my thoughts on, as we typically do here, and the possibility of where that local top comes in. And I also want to share with you some thoughts around what 90% or 95% of the market aren't thinking about right now. I've gone through my YouTube, gone through my Twitter. There's a lot of talk still around the halving and how this market is going to pump, get ready for Hong Kong ETFs, all this sort of jargon out there. So let's cover it off here. You guys have given me a very, very strong signal that you're enjoying this type of content. Let's do it again. 3,500 likes for this video, so I know that you are finding a lot of value from these condensed, market-filled, packed videos. And if you are new to the channel, thank you very much. Hit the subscribe. If there are some things that I cover in today's video that you are unfamiliar with, some theories, because like many of the regular viewers would know, 95% of the people don't cover it like this, then hang on for the ride and ask your questions down below, and I'll get back to them in future videos as well. So I'll cover off as much as I can in today's video to try and keep it nice and succinct for you guys this weekend. Dow Jones closed nearly 500 points lower on fears of potential Iranian attack on Israel. US stocks ended the day sharply lower Friday, but what we are noticing is the safe havens also went down. Now, my thoughts here, as we can see from the charts, obviously we focus on the charts first. Let's have a look at that, and then I'll give you my thoughts. Like crude, oil, of course, Middle East, it's usually like a flight to, money flies over to oil when they think there's going to be a war, because it's going to cause turmoil in the Middle East and make it more expensive to get the oil out of there. But we saw the top come in, so the new fresh high here at 87.67, and now a lower close on oil. It's one of the lowest closes in this period here. So very, very early days. Could be the earliest day, meaning that this could be the top or very close to a short-term top here for oil. But we'll have to wait and see whether we break this low here around 84.50. The point of this is maybe this fearful news. Now, as emotional as war events are, we have to try and separate that as investors. Okay, so if we've got friends and family tied up in this situation, that's different to investing. So we need to separate those. The news preys on the emotion, but let's just focus on the charts. We have huge, fearful news here. Markets that seem like they should have continued up have actually put in a top and closed very low. So this could be marking a top rather than a continuation for these markets, which should be strong. Oil should be strong when you see war. Gold should be strong, a flight to safety. And I posted this on X before, so make sure you are following. There are links in the video description here. Gold also peaked 24.48 and closed very low. If you're following candlestick patterns, it looks very much like a shooting star. And in fact, it's actually a lot weaker than what this pattern is showing here. Big wick up, and yesterday's close, or the recent close, was very low. The signal is much better when it is at the end of a significant move. Now, there's no confirmation that this is the end, but when you see it after such a long move in the same direction, the signal can get stronger. So that could mean that gold will at least bubble around here, best case scenario, I think, or start to head down again. That's not meaning that this is the final top, but as I've got something in the titles, probably somewhere around some sort of local top for many of these markets. As for the US dollar, it is climbing here, and it's broken through the 105 that we've been watching, so just above these tops, around that 104.5 to 105, and it's got the 50% level next to tackle, along with another previous top from October 2023. That's at 107. Now, you guys that have been following for a couple of years, we called this top here almost to the day. I'm not trying to get it to the day, but it just so happened to be the day before the US dollar put in its top because of how extremely bullish the news was for the US dollar. Everyone was talking about it. The market collapsed from that point. Same thing happened at the bottom. This one here was a little bit less of a pump from that low, but everyone was bearish US dollar. It was over. BRICS was coming. And of course, the market went up from there. We had a little bit of a flush out, but then it went up from there for many months. This is a monthly chart, so long-term moves here. So 107 is the next critical point to have a look at. Overall for Bitcoin, I'm still seeing it holding up relatively well, considering a lot of bearish news out there, the halving coming up, which everyone is excited about, but you're not really seeing that follow through yet, and the US dollar rising. All these things should be pushing it down further, but they're not yet, let's see, or not at all. So US dollar 107 is the price to keep watching here over the coming weeks of April. Interest rates, quick update here. We are on the verge of one interest rate cut for 2024. That goes back to my post here from January, so I've covered this heaps of times. January, I suggested that we weren't going to see cuts every single meeting, and essentially 3 months later, we're almost there. We're almost at one cut, and then potentially will be no cuts. Let's wait and see how that plays out over the coming months. But the idea around that is interest rates are too cheap because asset prices are still rising. That's all of the news pieces there, the stock markets now. And the main thing that I'm still seeing is the bad news is there, the wall of worry. The markets are still climbing in a macro sense, but we may have met that local top that is going to hold the markets up for a little longer than what people had anticipated. Now, in terms of the pullback, I still think it's not going to be anything significant that many are hoping for, sort of like double digits, right? Because there's still no signs of that. And one of the key things here is that we're seeing a lot of overlap on the bars. When it goes down, comes back up and covers the price action again. Comes down, comes back up, comes down, comes back up, and you're seeing a lot of overlap. So when you get a lot of overlap, typically it's not going to be a huge correction. Let's wait and see. Of course, I'm just looking at this, giving you my thoughts on the markets at this point. And essentially this has turned into the largest correction in 6 months. So I said that a week ago there, just in the title looking at that. The S&P has lost the most amount of points in any correction on the way up. And in terms of time as well, it is the longest time to the downside. What this means, and you can use it across any market, the rule goes along the lines of an overbalance in time and price would suggest that we're coming towards some sort of pause or turning point. So to make it nice, simple, succinct, S&P 500 is showing those signs. You also need to see a break of significant lows here. So somewhere around these lows of February is what you'd be looking for, February and March there. Now the correction comes in line with the seasonal pattern of 2024, and that being an election year. So S&P 500 election year seasonal patterns. Again, something else that we continue to follow on the channel. April, May, June looks to be the period where you could see a trading range form. And I mean, I wouldn't get greedy on this thing hoping for double digits. If we did get to double digits, that would probably be the end of the entire run. So you wouldn't want to be buying that dip. Nonetheless, let's just watch this as being a seasonal time where we could see a bit of a grind here. And for now, I think these markets are forming that trading range. And when I say these markets, I mean S&P, the Dow Jones, NASDAQ. You can see with the Dow Jones, this is now the largest correction of the year, or it was a few days ago. And it might even very close. You can see here 5.52, 5.53, almost as close as the October correction into that bottom. In terms of points, it is definitely the largest correction. Now let's move that over. We're at 9 trading days. So again, overbalance in time and price here for the Dow Jones, which suggests that this market is not going to spring up anytime soon because of the move to the downside exceeding any of the other moves here. So this could be the correction to measure from for the next move to the upside. So we're marrying short term along with long term here. Now for the NASDAQ, holding up much better. You can see it didn't break these lows here, even though it did correct yesterday, it didn't break the lows. So it could break the lows, but what I'm saying is because it didn't when the others did, it's showing relative strength over the S&P and the Dow Jones. So that what that could mean in the next stage when we do see prices go higher, obviously in my opinion, then the NASDAQ should lead the charge, which means tech stocks should lead that charge into fresh highs. All right. Now that leads us over into Bitcoin. And I showed you this article yesterday, just the Bitcoin halving from Arthur Hayes. And he says down here, if you had a chance to read it, great. If not, check it out. When most market participants agree on a certain outcome, and he's referring to the Bitcoin halving and market participants looking for $100,000 Bitcoin at the halving, the opposite usually occurs. That is why I believe Bitcoin and crypto prices in general will slump around the halving. That is precisely what we have been discussing here on the channel. I've given a range because of those previous, those extensions to the upside in price, while the pattern was still going up, while the trend was still going up, but I haven't been sold on the fact that we're going to go to 100. I've been pretty public about that. I've received a lot of hate about that. My views are over a longer period of time. I don't care about 24 hours or 12-hour movements in the market. I want to see confirmation of breaks, whether it's to the downside or to the upside, okay? So right now we're still in the trading range. We had a pretty reasonable flush out for Bitcoin, or at least in the liquidations, right, for the leverage longs. And on the flip side, for the altcoins, they got pretty hammered yesterday. This is Solana against Bitcoin. Decent hammering here for Solana. Still relatively strong overall, but you can go through the list of altcoins and just look at how much they've been hammered against Bitcoin value. Basically down. You've got to keep extending this tool down. It's lost 76% of its value against Bitcoin since January. Take your pick with almost any altcoin right now, and you can see that they've had a pretty significant move to the downside. Pretty decent there for Doge because it hadn't even gone up much. Let's have a look at some of the big stuff that everyone loves. Cardano, well, they used to love. Pretty big move, putting in new fresh lows. What about XRP? Putting in new fresh lows yet again. You can pick Matic, new fresh lows. Link, fresh lows. This is how weak some of these altcoins are as they slip back into previous accumulation zones. On the flip side, you want to look for stuff that is looking relatively strong. Pendle, if I go onto the BTC chart, will give you a better idea. You can see the relative strength here. It's still above those previous tops. Although it is correcting, it's still above those previous tops. Solana, not doing too bad for such a huge altcoin. It's back into the previous zone before it went for that final run out, but it's still well above all of the accumulation. Doesn't mean it can't get back down there, but it's what you want to see is the crypto above the previous accumulation that it broke out of, because that tells you, at least for the time being, that the market is finding more strength in that coin than the others, which are at those lows. They're strong for a reason and they're weak for a reason. If people aren't buying and they're back into those previous bottoms, then there's something fundamentally wrong. So although altcoins have gotten absolutely clobbered, I still don't think the cycle is over, but the local tops are most definitely in now for altcoins. I mean, we've talked about that for a couple of weeks now, but you can really see how those tops are in for the majority of them anyway. As for Bitcoin, this top here at 73,800 on the 14th, I would say that local top would be confirmed if we get a clean breakdown here on the 5th. So breakdown of $59,000 that occurred March 5th. Otherwise, we could continue to trend sideways, just continue to churn in this range of $74,000 to $59,000. We've got the halving coming up in about 7 days' time. But I'm leaning a little more towards the possibility of a breakdown, especially if this low is taken out. 64,400, if that low is taken out, probably going to come back and test these lows here. That would be the local top in for BTC. I mean, it is in at the moment, but there's still hope, at least from the masses, that we're going to see a skyrocketing Bitcoin price to 100K when the ETFs in Hong Kong are announced next week and the halving and all that sort of stuff. But you're here to listen to what 95% of the other population doesn't hear. And there's no signal yet that we're going to break through these highs because of these pullbacks. Now that's the short term covered off leading into the halving. What about the long term? As I've said before, provided we don't break under $48,000, the bull market's still intact, but we can see corrections. And something very interesting that I noted here is that this has been the least feared bull market in Bitcoin's history, or at least the history of recording the Fear and Greed Index. Now, just a quick look here at the bottom of the screen. This is the Fear and Greed Index for Bitcoin, and the lows, or the red section, is extreme fear. You can see from the previous cycle where I've got this box here up until this vertical line and the next vertical line, it hit the extreme fear once, twice, 3 times, 4 times, and then the bear market came in. This season, however, we've really only hit it once, and that was at the bottom. And if you wanted to touch on the June low, which was the accumulation period, maybe twice. Now remember, that doesn't mean that the price of Bitcoin has to go back down to these levels in order to feel extreme fear. It could just mean that we get a little flush out to whatever price makes the market most fearful. That's all it means. The price could literally stay at $59.5 or $60,000, just get a flush out to there, and we could see extreme fear, provided that was enough to bring the extreme fear into the market. Now, overall, in the short term, we have started to roll over in the sentiment, so things are shifting here. Keep an eye on that as we lead into the halving. And if this was to break down, something that, again, I don't think many people are really discussing, correct me if I'm wrong, but the possibility that we do grind a lot longer than what the masses had hoped for. Now, this is the halving of 2020. So I've taken it from this little box right here and just extended it to the current market action. Maybe it grinds around similar to what it did last time. You can pick and choose wherever you want to put this, but it's really just to give you a representation of a grinding market and essentially the volatility drying out of Bitcoin. Now, of course, it could go lower. I'm not trying to say either has to happen, but just to give us an idea that this could continue to grind sideways for a while because of how much greed we've had in the market leading into these highs so early, which wouldn't be a bad thing for Bitcoin because it would give us time to consolidate. We'll give the market time to consolidate until we can run up into those next highs. And the reason, or another reason for that, are our swings, which we've covered, looking at how Bitcoin has done 7 green months in a row, never done 8 green months in a row. So April could turn out to be a red month. At the moment, it's at 1.8% down, but we've got about 17 days to go in the month until that is confirmed. The other thing was the monthly swings, of course, and that is how many months in a row have we seen higher highs and higher lows before a correction. This is the current look at April in the red. Basically an inside month, lower highs, higher lows. So nothing too bad here, but the market is definitely feeling the pinch, especially if you are heavy in altcoins. So overall, I think this is a great thing if Bitcoin is able to hold out here, consolidate over the next couple of months. It would reset most of the counters, which could then give it a move higher again, which could then mean we go into a right translated cycle, and maybe this move up has just been extremely greedy, which is similar to what we've seen in the past. We've seen extreme greed moves before the market has to hold off and then follow into the end of that cycle. I hope you've gotten a lot out of today's video. Make sure to get those likes to 3,500 so I know you're enjoying this type of content. That's a wrap up of the week in crypto. If something else happens over the weekend, I'll be back with another video outside tomorrow for you. Otherwise, have a fantastic weekend and I'll see you back here very soon. Take care and peace out.